Hey folks, want to jump on here and talk a bit about a company called Wayflyer. That said, if you're based in Ireland, you may have heard of them already. However, if you haven't, that's okay as well. That said, let's get into the show. So, Wayflyer is a fintech company that provides funding and analytics tools for e-commerce businesses, helping online stores grow without giving up equity. What Wayflyer does, Wayflyer mainly helps online brands like Shopify stores get quick access to capital instead of traditional loans. It offers funding based on your store's performance. Key features: revenue based financing, get funding upfront and repay it as a percentage of your sales. Data driven insights, connect your store, e.g., Shopify, Amazon, to get analytics on performance, marketing, and growth. Fast approval, decisions are often made quickly using your sales data. Growth focus, designed to fund inventory, ads, and expansion. How it works: simple. Number one, connect your e-commerce platform. Number two, Wayflyer analyzes your sales plus marketing data. Number three, you receive a funding offer. Number four, repay gradually as you earn revenue. Who uses it? Shopify store owners, Amazon sellers, direct to consumer D2C brands, fast growing online businesses. Pros: no equity dilution, flexible repayments, quick access to funds. Things to consider: fees can be higher than traditional bank loans. Best suited for established stores with consistent revenue. Requires sharing your business data. There are a few different solutions in the marketplace, so here's a clear, honest comparison of Wayflyer versus Clearco versus Shopify Capital, so you can decide what's best. Wayflyer versus Clearco versus Shopify Capital. Number one, core difference: simple view platform. Wayflyer, best for scaling brands, ads plus inventory plus multi-channel. Clearco, heavy ad spend, fast growth startups. Shopify Capital, easy built-in funding for Shopify only stores. Number two, how repayment works. All three use revenue-based financing. Important, you don't pay fixed monthly interest. Instead, they take a percentage of your daily/weekly sales. This means slow sales equals lower payments. High sales equals faster repayment. This model is common across Wayflyer, Clearco, and others. Number three, key differences. Wayflyer, best all-rounder, works across Shopify, Amazon, etc., not limited. Focus on ads plus inventory growth. Flexible repayment plus analytics tools. Pros: bigger funding amounts, multi-channel support, no equity or personal guarantees. Cons: can be expensive, flat fees, daily deductions affect cash flow. Clearco, best for aggressive growth/ads, focuses heavy on marketing spend, Facebook/Google ads, offers 10K to $1 million USD funding range with flat fees, presuming USD, approximately 6 to 12K or 6 to 12%. Pros: great if you scale with paid ads, data-driven approvals. Cons: can get expensive over time, less flexible outside marketing use. Shopify Capital, best for simplicity, built directly into Shopify dashboard. No application, offers just appear. Pros: fastest plus easiest automatic repayment. Cons: Shopify only, no Amazon, etc., less control over repayment, often higher effective cost. Number four, the big hidden downside most people miss: these platforms use quote factor rates, end quote, e.g. 1.2x repayment. Example: borrow 100K USD dollars, repay approximately 120K dollars. If, again presuming USD, if repaid quickly, effective interest can be very high. Some estimates show 40 to 60% effective annual cost in certain cases. Number five, real world feedback from founders. From Reddit, quote, Wayflyer, solid and usually better rates than Shopify, end quote. Also easy approval, lower barrier to entry, but not always predictable predictable approvals. Number 6, which one should you choose? Choose Wayflyer if you sell on multiple platforms, you want flexibility plus scaling capital. You're doing 10K plus / month in revenue. Choose Clearco if you run heavy paid ads. You want to scale fast D2C brand. Choose Shopify Capital if you want fast plus zero effort funding. You only sell on Shopify. My honest recommendation, this is on ChatGPT, these are great short-term growth tools, but not ideal for long-term financing. If your business is stable, traditional loans, 10 to 20% APR, are often much cheaper. Bottom line, Wayflyer equals best balance. Clearco is best for aggressive scaling. Shopify Capital, easy but least flexible. Let's go over to gemini.google.com. As of March 2026, Wayflyer has evolved from a specialized e-commerce lender into a broader SMB, small and medium business growth platform. After hitting unicorn status in 2022, the company has spent the last year aggressively expanding its footprint and its product range. Latest financial news, Q1 2026. Wayflyer has recently secured major institutional backing to fuel its next phase of growth. $250 million, presuming USD, credit facility in February 2026. Wayflyer secured a new credit line from Atlas SP Partners backed by Apollo. This is specifically designed to expand their lending capacity for small businesses that traditional banks often overlook. Revenue milestone. The company officially surpassed $100 million in annual revenue, driven by a massive surge in demand for non-dilutive capital funding that doesn't require giving up equity. Total capital deployment as of early 2026, they have deployed over $6 billion to more than 5,000 businesses globally. New services and strategic shifts. Wayflyer is no longer, quote, just for Shopify stores, end quote. They have diversified their offerings significantly. Industry expansion. In late 2025, they launched an innovation fund to move beyond e-commerce. They now provide funding for SaaS, healthcare, retail, and consumer services. Hosted capital, a new, quote, embedded finance, end quote, product that allows other platforms like marketing agencies or tech stacks to offer Wayflyer-backed financing directly to their own customers. Wholesale and Amazon focus. They have introduced dedicated, quote, rolling finance, end quote, and, quote, wholesale financing, end quote, models to help brands manage high upfront costs of physical inventory and omni-channel expansion. US expansion. They recently opened a new major hub in Charlotte, North Carolina to better serve their growing American client base alongside their New York office. How it works in 2026, we already went over this a bit. The core appeal remains the data-driven, quote, non-bank, end quote, approach to lending. Feature Wayflyer's 2026 offering, funding limits, hopefully this is correct, $10,000 to $20 million, presuming USD. Speed application to offer in approximately 94 minutes. Funds in 24 hours. Cost, a single fixed fee, 5 to 10%, no compounding interest. Repayment flexible, linked to daily sales or fixed term options. Requirements, minimum 10K to 20K USD monthly revenue and 6 months in business. Analyst note, Wayflyer is currently positioning itself as the, quote, anti-bank, end quote, for the 2026 economy, betting that digital-first companies would rather pay a transparent flat fee than deal with the rigid collateral requirements of traditional lenders. Fascinating stuff. We're just over on 10 minutes. Let's go to this. Wayflyer operates globally, but its it's not available everywhere. It focuses on major e-commerce markets where Wayflyer operates. Core regions, Wayflyer mainly operates across North America, US, Canada, Europe, UK, Ireland, plus several EU countries, Australia, and nearby markets. Supported countries, main ones, as of recent info, businesses can typically access Wayflyer in United States, Canada, United Kingdom, Ireland, Australia, Spain, Netherlands, Germany, Sweden, Denmark, Belgium. That's approximately 11 countries total, and they keep expanding. Physical office locations, Wayflyer has offices in key global hubs, Dublin, HQ, London, New York, Sydney. They also have additional presence in places like Berlin and Charlotte as they expand. Since you're in Australia, yes, Wayflyer is fully active in Australia and has been since 2020 with a local team in Sydney. Important limitation, you must be based in a supported country to qualify. If your business is outside these regions, you can't use it yet. Bottom line, Wayflyer equals global but selective. Strong presence in US, Europe, and Australia, built specifically for developed e-commerce markets. I suppose the one big thing about Wayflyer is Wayflyer's one big idea: fast, flexible funding for e-commerce businesses without giving up equity. That's the core. Explaining simply, Wayflyer helps online businesses get cash upfront based on their future sales and repay it as a percentage of revenue. Non a traditional loan, not investors taking ownership. Why this is a big deal: number one, speed, funding decisions in minutes or hours, not months. Number two, data driven, uses your store data plus ads plus revenue to decide funding. Number three, flexible repayment, pay more when you sell more, pay less when sales drop. Four, no equity loss, you keep full ownership of your business. In one sentence, Wayflyer equals, quote, Shopify style funding, end quote, powered by data and repaid from your sales. What problem it solves? Traditional banks, slow, hard to qualify. Fixed repayments, Wayflyer, fast, flexible, built for online businesses. That's why it exists, to fill the gap, the funding gap for e-commerce brands. Bottom line, if you remember just one thing, Wayflyer gives online businesses growth money quickly using their own sales data without taking ownership. And I think that's it. Feel free to leave a review on the podcast. It's coming up on 15 minutes. And thanks for listening, folks. Maybe it's good to do a quick example of how it works. Finish on as well. I think we already talked about it, but let's make the super real with numbers so you can actually see how Wayflyer works. Simple Wayflyer example: your business, Shopify store selling products, monthly revenue $50,000. You want to grow, you need money for ads, inventory, so you got a Wayflyer. Step one, funding offer. Wayflyer offers $30,000 upfront, repay $36,000 total. This is the fee included, fee $6,000. Step two, repayment model instead of fixed payments. They take 10% of your daily sales. Step three, what repayment looks like. Month one, good sales. Revenue $50,000, you pay $5,000. Month two, slow sales. Or slow month, excuse me. Month two, slow month. Revenue $30,000, you pay $3,000. Month three, big growth. Revenue $70,000, you pay $7,000. It adjusts automatically. Step four, when does it end? Once you repay $36,000 in total, you're done. No ongoing interest. What's happening behind the scenes, why people like it? No fixed pressure. We already talked about this. No fixed pressure if sales drop. Fast access to cash, not giving away ownership. The catch, important. That $6,000 fee means you're paying 20% extra. You repay quickly. It's actually expensive. This is the part most people underestimate. When this works best, use Wayflyer if you can turn $30K USD into 5,000 or 50,000 plus profit / revenue growth. You're confident in ads or inventory scaling when it's risky. Avoid if your margins are low. Sales are unpredictable. You're already tight on cash. Bottom line, real talk, Wayflyer is not cheap money. It's fast growth money. Great for scaling, dangerous if used blindly. And that's it. Just go back to the one thing, just on 15 minutes. Bottom line, if you remember just one thing, Wayflyer gives online businesses growth money quickly using their own sales data without taking ownership. Thanks for listening, folks, and have a great rest of your day.